Welcome to Mokama Sunday service on this Father's Day Sunday. This is for informational purposes only. I am not a licensed financial professional. Investing is risky, so do so at your own peril and or in conjunction with your licensed financial professionals and advisors. So today we're talking primarily about charting. The first thing I want to do is just share my Thinkorswim. Can you guys see this?
Yeah.
All right, so I'm in Disney right now. I'm in a Disney leap. And so when we're talking about charting and charting basics, not even just talking about the execution of charting first, like let's just talk about like zooming out. So if you're investing long term, ideally you want to be zoomed out like on a monthly chart. Let me clean this up. Uh, Start from a monthly chart. I'll let 6, 16, 24. All right. So this is how I'm going to start looking at a particular stock because I want to see, is it at a discount? Um, is this at a discount? Is it not at a discount? Is it up? Is it trending up? Is it trending down? Like what is it doing? And specifically from an investment, if you're talking about investments, you should be looking at like a longer time horizon, like 5 years. So if we're on a 5 year chart right now, um, I'm just kind of looking at Disney. I also look at the fundamentals, but right now we're just talking about like the technicals and like where the stock price has been over the last 5 years, one way or another. So, what I'm looking for in terms of entering a stock, number one, do I believe in the company? Do I think Disney is going to be around for 5, 10 more years, 15 more years, and still potentially thrive? For me, I do think that about Disney. And the issue is at what price, is it worth hopping into Disney or where is a good place to enter? If you look at Disney long term right now, its chart doesn't look that great, right? You had an all-time high sometime, what is this, in 2021? March of 2021, you had an all-time high. We're in June of 2024, 3 years later, and Disney is nowhere near its all-time high, right? So from like an expectation of whether Disney is ever going to get back here, I don't know. What I do know though is that this is a company that I think is going to be around for a while, and it's at a low, you know, on the spectrum of where it's been over the last 5 years. And then even over the last 5 years, it's kind of been in a range from like 80 to 200. So it's kind of been, I wouldn't say sideways. It's been sideways to bearish, but it hasn't really tanked below 80. So if you can get Disney at $80, that seems to be the best place to get Disney, right? But it's bearish to sideways. So the first thing that I would do is go put a fib retracement on the chart, which is this percentage sign right here. And then I'm going to start off by drawing the highs at 203.02, right? And then connect it. Oh, actually, the low was 78.73. And then you can right click that, edit properties to make sure that it's exact. Bam. And then I'm going to extend it to the left. Right. So those are our fib levels. These are levels that price is generally attracted to. So if you go look at, they kind of serve as that like support and resistance. Like there's some resistance right here at this fib, right here. Like if you just kind of go look at a monthly chart, in most cases, some stocks don't track these fib levels really well, but you'll kind of see even right here, it has some trouble staying above this 50% fib level. And then when it drops down, it kind of tends to hold at a fib level and might go up and then come back down. But these fib levels tend to be good support and resistance levels for a particular stock, So if you zoom out on like the monthly, um, this is what it looks like. And so if you see this alert that I have there, and for me, my level is 100 because just looking at a bunch of stocks, ETFs, big round numbers, 100, 1,000, 200, 300, price tends to attract there and either go up or go down at those like major levels. So when Disney is around $100, it's either going to bounce there and serve as support, or it's going to go underneath that and then probably be new resistance at $100, for Disney. And then I'm just looking at prior months, right? So 100, this level right here was a top. It was a low right here. It opened right here at 100. It opened right here again at like 100. And then just looking at this candle right here this month, it bounced off 100, and right now we're there again. So um, I'm looking at like how often things are recurring. If things are recurring a lot often at a particular level, at a particular indicator in terms of like a moving average, then that's going to be a really good time for me potentially to enter a trade. And right now, I'm just looking at this 200-month moving average on Disney right here. This seems like a good place to buy too. Bounced off it once, twice, three times, four times, five-ish, six, seven, eight, nine, 10. So my Disney trade doesn't work out, if it gets back down to around 92.50, I'll probably try it again, you know. Does that make sense in terms of like just zooming out on a monthly chart?
Yeah. Can I see how you put that 200 line too? I want to know
Yeah.
where
So this button right
What
here,
are the other three lines as well?
oh, okay. So for me, my 200 is always gold or yellow. The green is a 21. It's a 21-month moving average because we're on a monthly chart, because all of these candles are monthly candles.
Yeah.
So when you plug in your studies here, it's based upon the chart that you're on. So you'll see I have a 21, a 34, a 50, and a 200. Um, I have specific colors that I use. My 200 is yellow, my 50 is blue, my 21 is green, and my 34 is orange.
Gotcha. Appreciate it.
Yeah, you can put yours in any color or whatever. But that's just kind of how I know. Like I know that yellow is going to be the 200 every single time. That's just how I do my chart.
No, that makes sense.
If you go on this gear icon, you could change the colors,
Yeah.
for each one, right? Oh, or you can even make the line thicker, if you really want to be notified, or it pops out to you that, hey, this is close to a 200 or 50 or 100 or whatever you end up using. Um, so for me, that's primarily what I'm looking at. That's a monthly chart, but then so I'm going to start zoomed out, and then I'm going to zoom in a little bit more. So then I'm going to go to maybe like a 5-year or even a 3-year week chart. I should make it consistent. Let's just go to a 5-year week chart. Yeah. All right. So looking at the 5-year week chart, um, these are weekly candles now. So you see, we have way more candles, even though we're still on a 5-year chart. And now this 200 right here is a 200-week moving average. This is a 21-week moving average. This is a 34-week moving average. And this is a 50-week moving average because we are on a weekly chart right here. So these lines are going to be different now. They're going to be in different places because the chart is different. So if we zoom in, you can highlight it to zoom in. Sometimes you'll be able to kind of see more on a weekly basis of like, where is price popping? So another reason I kind of had 100 as my level, because if you look, and this is more recency, like in terms of recency bias, like this candle, this candle, this candle, this is what, this was last week. This is the week before. This is the week before. This is the week before. I think I purchased my Disney Leap N this week, but it looked like price was bouncing off of 100 just 3 weeks in a row. So I thought, hey, Disney had dropped, right? This was his most recent drop. It had popped. It had been doing well, getting some momentum up here. Then it dropped. So I generally am never buying anything at an all-time high. Even when I'm trading, I'm never going to buy something at an all-time high. What I wanted to do is wait for this thing to pull back, which is what it did, right? I'm like, oh, it pulled back. Great. $10. All right, almost $20. All right. Like now this looks like it might be at a decent discount for me. And looking here this week, and this week, the low was about 150, which is why I kept telling y'all, like, hey, this thing looks like it's holding up at around 100, absent this last week's candle, which is why I wouldn't say I'm extremely worried, but it literally hit my stop loss is around 99.25, and it tapped it on Friday. It literally tapped it. And so looking at the week chart, this looks like it might be going down a little bit more, but at least we didn't get one of these massive candles like this where it looks like it's going to come all the way back down here. But usually I'm looking at like a month or a week chart to kind of see what the overall like theme of the stock is, right? For me, I think Disney it came down and is consolidating a little bit. So I took a chance to see, hey, if this consolidation is going to lead for it to kick back up. And if we're looking at like where it's been over the last 5 years, which is what I always talk about, Disney is more than 70% off, right? Because look at this fib level at 23%. So in terms of upside, if Disney reports some really good earnings or a new product, or it gets its streaming service off the ground, to actually be able to compete with Netflix, it gets a new movie that hits like a Lion King or something like that, and it pops up. That's what I'm hoping for. But worst case scenario, like Disney is relatively inexpensive from where it's been. It's off. It's 80% off right now. So talk about buying low and selling high. Even if Disney is not going to get all the way back up to that 100% level, if I can swing this all the way up to that 50% and not be greedy, I'll be good, you know? And then keep a couple of runners, because how many contracts did I buy? I think I bought like 3 or 4 contracts of Disney. I'm not sure. It's at least 2, because I always buy at least more than one now so that I could scale out. But that's what I was looking at on the weekly chart. And then on the daily chart, there was a gap fill. This was a day either Disney reported earnings or some good news, right? And it was right there at 99.25. And this is another thing that I've seen too. And now we're on a daily chart, daily 5-year daily chart, but just zoomed in. This fit, like I'm almost certain that this was either Disney's earnings or they announced something or something happened. Maybe this was when they won the shareholder battle. This could have been that day they won the shareholder battle, but I don't remember. But on that particular day, before that news was announced, Disney popped up. And so now we came back and kind of filled that gap to the downside. And that was right around at 99.25. And what did we see on Friday? It bounced right off of that number. What I'm hoping though, if it goes below this number, I'm cutting it. Like I said, I cut fast. This is even more of a long-term play, but I'm not just gonna lose money to lose money. I would rather cut this. My ratio to potentially win was, I think I was trying to swing it back up to around this high at the very least. So what? I bought it at around 101, 102. So that's like $20, $20 to a $3. So it's almost like a 7-to-1 risk to reward ratio, like for my trade. You kind of see how I got that number, right? If I bought it around 101 and my goal is to sell it at least half of my position, if not more than that, at like 122, 123, that's about $21 of reward. and I'm cutting it at 99.23. So that's about $2 to $3 of risk.
Yeah, got it.
Right? So all my trades I'm setting up that way. And if it kicks below, I'm hoping that this was the final, this was the final thing that got everybody out that was trying to sell, and maybe it's going to reverse and head back up. If it doesn't get above back that 200, which is the reason why the 200-day moving average, this is the reason why I bought the thing, is because I like stocks that are close to their 200, but ideally that bounce off of it. If it doesn't come back up and bounce off that 200, I'm going to cut it. And then I'll wait until it gets back down to this level around here, like where it looks like 80 and 90 is another good place to try and buy it. Or from a monthly level, I think we looked at the monthly. The monthly level that looked good was, around 90-250 at this moving average. So it's not like a perfect science or anything. It's more of like, where has price been in the past? And is there some sort of indicator that it tends to bounce off of, like it did here? You see this 200 here. It came below it, kind of like we're doing right now. And the people that didn't have stops too tight came in and they made a ton of money, right? Imagine if you bought it at the 200 here for around 91 bucks, you would have had the stomach about $3, $4 a wiggle right here. If you bought it, like, let's say on this day, and you bought it at 91, the low here was 88.69. So if you didn't have too tight up a stop, you would have got all of this up here to this move, right? So for me, just zooming out a little bit more, Disney was going down, but it looked like it was in a recent uptrend. So I'm betting that this is a pullback of the recent uptrend from here to here, when Disney hit like a 5-year low right here and bounced off of around 80 bucks. But if you can get into Disney at around 80 bucks, that's like the load your boat price, like buy 300 shares down here. I just don't think Disney is going to go away in 5 to 10 years. So if you can get it at an all-time low, like I wish I would have bought Disney at 80 bucks and then sold it at around a 120. That's a 40-point move.
Yeah, that's nice.
Right. And so you don't have to like wait till it goes all the way back up to 100%. But if you can grab it at an edge, at the bottom edge, like you can hold on to Disney forever. Like and then while other people are complaining about the price and the stock going down, it's mostly because they bought it at the wrong price. If you would have bought it at the bottom, like it wouldn't have been a big deal for you to hold on to this thing for a while. So that's why I bought Disney, just from like a charting perspective, right? If we go to shop, second example of something I bought recently. I think I bought it on this day or this day. It's one of these days. And shop has been killing lately. However, it does look like it might be a little exhausted. And why do I say that? And even though I haven't drawn the trend lines, looking at a daily chart of shop, there's going to be some resistance right here. Because look, this 200-day moving average, while things like to bounce off of it and go to the upside too, a lot of times things like to bounce off of it and go back to the downside. The one thing that I like is that this candle closed above it. Just something that tells me that if price is above the moving average, there's a good chance that it might keep going. Now, if it would have came up here and wicked down and closed like down here, then it's looking like better resistance to me. But zoom out again. So drawing trend lines. I don't use trend lines as much anymore personally, but more so because I just look at the chart and kind of see what it's doing. So when you're drawing trend lines, you want to draw the highs. So we have a recent high right here. I'm going to put a point right there and then kind of draw the highs together. Let's see. And once again, this is not a perfect science. So if we extend it to the right. So for me, like Shopify, when it gets to like 70-ish, there's a good chance that it can meet some resistance. Um, and really, where I want to sell my first contract out of my position, let me just go to line. So look at Shopify right here. How many contracts? I have 3 contracts. I bought 3 contracts in my retirement account, my wife's retirement accounts on Shopify. So where I want to sell my first contract, because I'm not going to sell all 3 at the same time, I'm going to leave 2 runners so that I have like a potential target 1, a potential target 2, and a potential target 3. So looking at this chart right here, I really thinking I want to reach this level right here where I have this alert. This is my alert to sell. All right. And the reason why I have it there is because the last high that we had, and look, it looked like it came down this gap. And then the last high that we had was around 77 bucks. So what happened the last time we were at 77 bucks? A lot of people sold the next day. So that's where I want to try and get out. That's my first stop. Is looking at a recent high, and you could probably see this better on a weekly chart. Look, the lines kind of come together more on a weekly chart. See that 77? Yes. This is like the next candle that we have to move up. So if you're looking on a weekly chart, there's no more resistance really up here until we get to the highs of this candle right here. And the high is just above 77. So that's the first place where I think a lot more selling is going to come in. It might even come in here at 50% of this candle, because what a lot of people like to do as well with fib levels, like if they see a big move like this, they'll put a fib level right here, right? And that 50% retracement line on a large candle is a good place that serves as resistance and support. So if I were being extremely conservative, I probably would have sold a contract of the Shopify leap, one of the 3 Shopify leap contracts that I bought on Friday. But for me, my expiration is not until like I think June of 2025 or December of 2025, something like that. So it's something that I've decided I'm going to make more of a long-term play. So I'm not going to get off on the first stop. But I did move to break even. So if Shopify comes all the way back down here where I bought it, I'll get out, for no win, no loss. So I'll move my stop to break even. Now that I'm up so much on this particular trade, I'm not going to lose, but I am playing with house money now. That's just kind of how I feel. So this is kind of the first stop. The next stop is around 77 bucks. So that's when I'm going to sell my first contract. And let me take that off. Move. Yeah. And I'm just looking my second stop. If we get here and I'm able to sell one contract, my second stop is probably going to be at this high right there, around 91, 90, probably 90. I'll probably sell another contract if Shopify is able to get up to 90, and then I'll keep a runner. And that's why even now, like I want to buy at least 2 contracts or something, but having 3 or 4 contracts or something, it allows you to take some profit when you get a move that you would like to see. And then when you're playing with house money, your confidence is just so much higher, because it's like you literally can't lose. You have a stop on at break even, and you've already scaled out, made some money on one portion of a trade, made some money on the second portion of a trade. That's how my Apple trade went. And yeah, scaled out. And so that's why I got out of my Apple trade, and I'm still in my Google trade. My Google trade, I only bought 1 contract. So it's up $4,000 right now on each contract. I bought 1 in mine, my wife's, and my daughter's account. So I'm up like 12,000 on that trade. But if I would have bought multiple contracts, I would have scaled out by now and then really been playing with house money and have profited a long time ago. But for me, for Google, I think Google's going to get up to 200, a nice round number, and that's really where I want to sell it. So right now there's no resistance to be found on Google because it's at an all-time high. And that's the dangerous thing about all-time highs and why I wouldn't ever short a stock that's at an all-time high, because there's no resistance. The price has never been there before. But I do know that the market likes nice round numbers. So if Google gets close to 200, that's when I'm going to sell my position in Google. At least that's my plan. It still looks bullish if you look at it over time. So I'm holding it, right? I'm not thinking about selling it. It's still going up. It's wiggling and whatnot, but I'm up $4,000. Where's the Google? Right here. I'm up $4,100 on that Google option. So like, I'm not going to sell it unless it really dips. But worst case scenario, I'm at break even. I don't anticipate losing $4,000 on that trade or having to go way back down to the place that I bought it right here. I'll probably, like, if it gets below this number, I'll probably sell it. But like, it still looks like it's heading up to the upside. So yeah, I'm really waiting on that 200 number, and then I'll get out of that trade. All right. I know I've been talking a lot. Any questions just kind of on like technicals in general? Like seeing how I'm using prior price movement to figure out where something's potentially going to bounce up or bounce down.
One question is your base and the charts that you're looking at are based off of the 3 month, 5 months? Which ones are usually
No,
bouncing?
so I use multiple time frames. If I'm looking at something first, let's say there's some stock that somebody mentions that I don't know anything about. That was Elf a few weeks ago. I'm so pissed I didn't take that trade on that day that I told y'all right here. Like, so let's say Elf. It's a beauty product brand, right? I don't know much about it. The first thing I'm gonna do before, like, let's say I research the fundamentals of the company, what it does, how much money it makes, that sort of thing. And then I go look at the stock price. First thing I'm gonna do is zoom out. What do you think? What do you look at this chart? You're like, wow, this would have been a great stock to be in way back here 5 years ago, right?
Yep.
That's what I'm looking at. So you need to, instead of like when you go on a day chart, this is what a lot of people do. They go on a day chart and then they look at this, right? And they go, okay, Elf is going sideways, it's sideways to bullish, right? But then it's like, no, if you're invested in this, go look at, no, Elf is bullish over the last 5 years. You zoom out, like, especially if you're investing in something. If you zoom out, you're like, there's no way you can say that Elf is anything but bullish over the last 5 years. This thing went from $7 to $200. That's a 100x return on your money if you would have invested in Elf 5 years ago. Not 100x, whatever. What's 200?
Yeah.
Like 50x, something like that, right? So $1 would have been $50 now if you would have invested in L 5 years ago. So this is where I start. And for me, this is what I'm talking about. Like, is this a good company? Diz is a little different. Diz looks like it's going down. So it's more bearish, right? Diz is more bearish over the last 5 years. So if I'm buying Diz, I need to make sure it's at like a super discount. I'm not going to buy Diz if it hits 140 because it's going to be like in the middle of its range and I don't know if it's going to go up or down. What I would like to do is buy Diz at an edge, like if it gets down to 80, that looks like where it's been. But I'm going to be less confident in Diz's follow through versus an Elf follow through because Elf is way more bullish. If you go look at Nvidia, look, it's way more bullish. AMD over the last 5 years, way more bullish than like a Disney. So Disney might have less follow through, which is why I told you if Disney gets back up to here, I'm selling half of my position and they might keep a runner up to here. And then I might be out by the time it gets to 50% of its all-time high because looking at Disney, it doesn't look as bullish as Elf. So I'm probably not going to hold on to it as long as I would hold on to like an Elf or what I just showed you, Google, right? Look at Google over the last 5 years. If you'd have bought Google at 50, It's at 180 now. It's 3-4x, whatever your money would have been. That looks more bullish. Microsoft looks more bullish. Apple looks more bullish, even though it was trading in that range for a long time. But over a 5-year period, that looks like a better stock that's going to have some more follow through to the upside. So this is a stock where I'm not going to anticipate Apple falling all the way down to this 23.6% fib retracement. Apple barely gets, even when we were doing terrible, Apple barely became 40% off. So this is a stock that I'm probably going to pick up when it's at less of a discount, like if it gets back to 166, because Apple doesn't drop like Unity. This is terrible. Now look at this damn chart. This is the worst one I've seen in a while, right? Unity had a high back here, but like, yes, maybe you take a position, but what I don't want to see is something hitting a low like right here. Let me do a price level. This was his former all-time low right there, right? At least over the last 5 years. What I don't want to see is a stock going below that all-time low. Now, I would have liked to see it, like if I would have bought it, I want to buy it at like 2084 and see it bounce off of that. But if it's not bouncing off of like its 5-year low, then this is a stock that could be bankrupt and it could go to zero, right? What's another bad one? PayPal.
What I want to know is also, while you're looking at these, what makes you go into like the daily chart, the 5 month? What concepts do you
Well,
when you're basing your trade? Which ones are you looking at, or why and why?
if it's not a stock that I've been like looking at for a long time, like this is why I'm showing you Unity and PayPal's charts, because I look
Mm.
at these stocks all the time, so I already know what they look like. So for me, I'm not going to go into PayPal's monthly chart or Unity's monthly chart because I know how bad those stocks are because I follow them all the time. So for me, I'm going to be mostly looking at daily prices in stocks like this if I'm going to trade them, or whether it's to the upside or the downside, because I know PayPal is doing terrible, right? So for me, generally, is when somebody puts something new on my radar or a stock that I'm not too familiar with, I'm going to go to the 5-year month chart to figure out, hey, is this thing bearish? Is it bullish? Is it neutral? Like I would say PayPal is bearish to neutral right now. It's been bearish more long term, but it's been consolidating from 50 to about 80 to 90 over the last year, right? So it's dropped, but it hasn't dropped like significantly more from where the all-time low was, or the 5-year low was right here. So, like, that's kind of what I'm like. If I'm not familiar with the stock, I'm definitely going to zoom out. I'm going to go to a monthly chart and figure out where it is. Like, throw out a random stock that you're interested in that we haven't talked about.
Let's look at Amazon.
No, we look at Amazon all the time. I know Amazon's close to an all-time high. That's
Uh,
that's what I'm
like,
saying. I already know where that is. That's close to an all-time high.
let me see. Let me go to my targets. See why.
Do like something random.
What about like Lucid?
Yeah, I already know what that looks like too. That's terrible. That's gonna go out of. That's probably gonna go bankrupt too. Look, I know the entire the battery
Yeah.
electric vehicle.
Why do you think that's going to go bankrupt when they making cars and all that? It's such a
Well,
high tech
no,
car.
why do I think it's going to go bankrupt? I'm glad you asked that question, because the stock price was $65 at an all-time high. Now it is $2.30 or
Yeah.
$2.50.
I just don't know why it went from that to that too.
And so and let me go to share that's the idea earnings. And because its net profit margin is minus 394%, It loses $730 million a year or a quarter right now.
Dang.
Its earnings, it missed on earnings per share by 22% and revenue by 5%. This looks like a company that could go bankrupt to me.
Yeah.
It loses more money than it makes
Nice. Got it.
by $500 million a quarter, at least the last quarter. So imagine your rent is $6,000 a month and you only make $2,000 a month. Are you gonna go bankrupt?
You're gonna go homeless.
That's what I'm saying. And the form of being homeless for a company is bankruptcy.
Where?
So this is why I think Lucid is gonna go bankrupt. I would not buy this stock. And then it's so cheap right now you can't even short the thing either because it's almost at zero.
Hmm.
So this is what I'm saying. This is how I would look at a stock. Now it's one thing if this thing just IPO'd and then IPO'd at like $5 or something like that, and you can't really tell. But this thing IPO'd at like $10 way back when it looks like, and went up to 60 and is down at $2.50 lower than its IPO price. I never want to see a stock lower than the price that it came on to the stock market at. Yeah. So this is why I don't like Lucid. This is why I'm saying, like, when you start with the zoom out versus, and this is a perfect example. Let's say you're on the daily chart on Lucid and you're only looking at this. You're like, oh, Lucid is consolidating. No, it's not. This shit is terrible,
Right.
right? You zoom out, that ain't consolidation. That's about to go bankrupt. So that's what I'm saying. Like, but if you're just looking at the last couple of months, you're like, oh, this isn't that bad. Like, no, this is terrible. You know, give me
Let's
another one.
do one. Let's do one more. I don't know if you ever seen this one, but do a Toon. Toon. It's a cartoon studio that was coming out. There was like a lot of hype on it, and I felt like it's just
Nah, bro.
it. Yeah.
I'm just looking at the chart. It's a no.
So no, on that too.
Can anybody hear me?
Yeah, go ahead.
Oh no, I'm sorry. I've been having trouble with my mic the whole time. I've been asking questions the whole time.
No, we ain't heard you at all until now.
Okay. I had to switch devices. All right, never mind.
Okay. What questions do you have?
I don't remember.
Yeah.
But I was gonna say you could try Marathon Digital. MARA.
Oh, Mara. It looks like it's not as terrible as the last two or three that we had, but I wouldn't invest in this long term. I'd trade it. I'm just from looking at the technicals without knowing much about the company. I wouldn't. This wouldn't be a long term investment for me, but I'd trade it potentially because at least like it came up from this bottom right here, so it's I would say like neutral bullish, like it's going up at least from this low. And I also like to see too, like what was the stock market doing at this time? So what I didn't like about Lucid and the other one that we just looked at was that when the stock market was rebounding, it wasn't rebounding, and that looks terrible to me. Like if the whole market is rebounding, but your company is not, that tells me that you're not doing so well, or because you should be rebounding with the stock market. If the entire ocean is coming up, you should at least be going up too. Even with Disney, it did that, right? Look at the same time period that we were just looking at Mara, right? Everything was kind of rebounding at the time, and that's what I want to see. But then you had your PYP. Look at your PayPal didn't do that, so I'm like, I don't like that. At the whole market, we go look at SPY, right? From that same date, look at SPY in October, and it dipped and came back up. So I want to see like, okay, Disney did that in October, came back up. PayPal, not so much, right? So I don't like it. Mara kind of did in October and came up a little bit, so at least it's rebounding with the market. But this is something for me. I would rather trade this than like invest in it long term, at least from just looking at the chart. And it's below. It looks like this moving average, this 200-month moving average, is serving as resistance 4 months in a row right here. So if I were to trade it, I would trade it and try to sell it when it gets to 26, 27, and then I'm out.
Let's say you have a stock you're not accustomed to or familiar with. You would start at the 5-year month. Then what will be your next step if you like what you saw at the 5-year month?
And then I'm probably going to start zooming in. So let's say HD, because we were talking about that a few weeks ago, right? I like HD overall long term. Look at the 5-year down here, the low, and it's more of a value stock because it issues dividends, right? But look, it's bullish to neutral, right? Because if you look at 5 years ago, if you would have bought it 5 years ago, you would have made some money, especially if you got out right here. So if I'm looking at Home Depot, like this is what we're talking about. I'm looking at, okay, I'm on a month chart. Where do I potentially want to buy this? I want to buy this probably close to 280, that level, right? You seeing all of this action off of that level right there?
Yeah.
1, 2, 3, 4, 5, 6, 7, 8. That's my target to try and buy it, but we're nowhere near that. So there's no real reason for me to zoom into a week chart or a daily chart. But let's look at something I'm looking at right now, Dash, right? Dash is at a level right now that I want it at because it's close to a 200 moving day average. We're on a monthly chart, but as you see here, Dash is something that had an all-time high here 5 years ago. Well, not 5 years ago. This was in 2021, end of 2021. It came down, but it's been consistently heading up, and I like the upward momentum, but I didn't want to buy it here. It's the all-time high. What am I doing? I'm waiting for a pullback. It hit that level right there at 110 and stopped, and it looks like that 110 level is good again. So if I'm on the month chart and I like this level right here, which I do mostly, and this because I found this on a daily chart. I like how it's looking from a monthly standpoint. It's going up. It's headed in the right direction. It's had some pullbacks. That pullback here, this would have been a good level to get in at. It came up again, and it looks like it's pulling back again. So I'm like, oh, okay, I like it. So if I like it, now I'm going to start looking at the weekly chart and go figure out, hey, are there any weekly price levels that look good, right? Is there something that it's bouncing off of? And this is what I saw. Once, right here is bouncing off 110. Right here, bounced off 110. Right here, bounced off 110. Here, it closed at 110. It came down, but closed here and here again. You guys see that? It's like 6 weeks in a row.
Yeah.
So that's my level. It's 110. 1, 2, 3, 4, 5, 6 weeks. That 110 level has been hovering around. So I'm like, okay, this is a good target. What happened?
You're thinking about doing a leap with that one? Is that what you?
I'm probably going to have to buy shares because the leaps aren't liquid. So this is why I didn't get into this trade earlier, is because the leaps aren't that liquid. All right, now we go into the daily chart on Dash. Same thing. It kind of mirrors a week. Come on. Damn it. Look at that. Right? And my favorite indicator from a long-term standpoint is that 200-day moving average, because we're on a day chart. It's popping right off. That 110 is right there by that 200-day that's at like 107, 108. So that's my range. I want to buy this thing at 110. And my stop is going to be probably just below this candle. If this low right here on this candle is at 106.22, then my stop is going to probably be like $5, no more than $5. I would love it even more if I could buy it at like 108. Or yeah, if I can get this thing right here, I don't know if it's going to come back down here, but if I can get that at 108, that would be my perfect price. But I'd probably be willing to take a risk on it at 110 and probably keep a stop right underneath this 200-day moving average, which is my main indicator for getting into this trade. So maybe I won't keep it all the way down to 105, but the indicator is at 108. So maybe at like I always like to give it a little wiggle at like 107 or something. I'll probably keep my stop. So if I buy at 110 and I have a $3 stop, that's a $3 risk, right? And what is my potential reward if it gets back up to the most recent high of 143? So that's $30 of reward, right? 110 to 140. Let's say I would try to sell at least half my position, if not the whole thing, at 140. That's $30 of reward for $3 of risk. That's a 10 to 1 risk reward ratio. That's a good trade for me.
Mm-hmm.
And
And
so on this one, you said you would just buy straight stocks. It wouldn't be an option.
yes,
Yeah.
and I'll show you why. Because I would love to buy a leap on this. So we go a year out to June of 2025. Look at the open interest.
Um,
Not
Nothing.
too many people are trading them like that.
Nothing. So it'd be hard for me to get out. Same thing if I go further out. Nothing. Unless you go out of the money, and I never buy any leaps out of the money. I like to buy them deep in the money. So nothing. That's my issue. And in fact, I think I was going to get in the same day I bought that Shopify leap, but that's why I didn't buy a leap on this stock, is because there's no open interest. Even here, even if you go to September of 2024, there's no open interest on the stock. So a lot of people don't trade dash options. So that's what gives me pause to trade options on the stock. So I would probably just go buy 100 shares. And
Gotcha.
the spread isn't that bad. It's $1, you know? So losing $1 per share, worst case, $100, but try to get in closer to the bid. So if it's at 112.05 right now, I would be trying to get in closer to that 111.70 mark, which is where the bid is. But ideally, actually closer to 110, because that's where I want the stock, because that's the level that it's been bouncing off of. 110 to 108 is where I want to buy it. So if Dash drops between 108 and 110, that's probably when I'll pick it up. And to hope that it keeps bouncing off of this and then gets us another run, fills this gap through here, which will be the first test, was how it dipped. And then let me show you why I really like Dash long term. You go look at the fundamentals too. So I don't just trade off the technicals. I'm going to look at the fundamentals. What did it do last quarter? Look at those numbers. The net income wasn't great, but it's up 85%. The revenue is up 24%. The net profit margins are below because it's still kind of a pre-revenue company, but it's up 88%. Looks like it's going in the right direction to me. From a recent earnings standpoint, it beat its expectations. The revenue is going up. And once again, I'm not hoping that this thing goes to the moon. I'm just trying to get it to the next fib level, or at least to the most recent high, you know. And actually, I should probably zoom out a little bit more. Yeah, the most recent high.
What's the most recent high on that?
Right here, 143. So I'm trying to get out of like 140 before everybody else starts selling.
Got it.
See, I'm trying to get off the train before everybody else gets, you know.
Yeah.
I like that.
So if I'm looking at this high right here is at like 140, but the most recent high is 143. So if I bought like 100 shares, I'm probably going to sell at least 50 of them right here. If not, sell 50 at like this halfway point right here, and then sell the other 50 up here. If I buy 100, if I buy 200 shares, sell 100 here, and then 100 there. You know, that's my target. I might wait, but I might put a trailing stop on it or something, unless it like explodes through that level one day. Like if it explodes through that level, I'll hold on to it, but then I'll put a stop at where I originally wanted to sell it. You know?
Do you know what was occurring on that day where there was a big drop?
Right here.
Yeah, right there. Yeah.
I think it was earnings. It was earnings.
Oh, okay.
And see, this is what I look for. Like, did somebody report earnings that weren't as great as everybody's expectations, but they were still good? And I'm waiting for it to drop to be more at a discount. And then there's going to be a place where everyone else is looking at the same thing that I'm doing. Like, hey, Dash's earnings weren't that bad. I don't know why it dropped like that. And now it seems to be consolidating at this level, and the earnings were pretty decent. So for what the expectations were. So, and then that means probably the next earnings season, the expectations are going to be lower. So if the bar is lower and it does pretty well and it keeps growing, this thing is probably going to come right back up here. It was the same thing that I told you on my Google trade. So, where was it? I think it was right here. I think did Google report earnings and it dropped? It was something that happened where Google dropped. And I looked at the earnings. When did I buy it? What day is this? This is March 5th. Let me go look at the last earnings period. Yeah, it was in March. No, it was reported April. No, what was the last one? When did I buy it? Maybe it was the December. I don't know. I maybe it was December when it dropped. I just looked at it and I was just like, look, the earnings expectations, it beat earnings expectations on the earnings per share. The revenue was a little bit higher than was reported, but it didn't kill. And I feel like either Apple or Microsoft have reported great earnings right at the same time. So people bought Microsoft or Apple and then they sold Google. It was something like that. But then I was just looking at it from a fundamental standpoint. I was like, look, Google has beat its expectations like 3 quarters in a row. Why is this thing tanking? You know? And so
Yeah,
that that's that's what I'm looking for. It's like this was December, I think right there. Hold on, let me. Yep, right here. I think this was around when if Google tanked or something with the AI, something they reported it tanked, maybe an AI report or its Gemini's test and do so well. It was something that happened that caused Google to fall. And then everyone was talking about Chat GPT and not Gemini at the time. So it caused it to fall. And then I was on this date, I saw it hit that 200-day moving average. And then I went and looked at the earnings and I was like, its earnings were good. Why is this stock falling if it's reporting good earnings? The revenue is growing, the company's getting bigger, the earnings per share is growing. So why did this thing, other than it came from a prior all-time high, came down, and then I saw it kept coming down and hitting that 200. So I bought it right around here. And so when I'm doing leaps, I'm not just looking at the stock price, especially if it's a long-term leap. I'm going to go look at the fundamentals of the company, primarily its earnings. And so this is why I was telling you, Isaac, that I favor Dash over Airbnb because Dash's last earnings, like, look at that, the green. Just look
mm-hmm.
at the green, right? Everything, all of the most important metrics are up. Even though it's losing a little money, it's raising cash. It's not a ton of cash like what we saw with Lucid losing $500,000 every quarter. This looks like it's heading in the right direction. It missed that earnings period right before, but the one right before that, it beat, right? Like crazy. So for me, that looked really good versus Airbnb that's also close to its 200 moving average. I liked it, but it had that huge miss here. And from being in the rental property space now and understanding how a lot of governments and are trying to prevent Airbnb from growing, that's why I don't like this as much long term as I like Dash.
Got it.
Right. But it did do pretty well on its last earn. And this is another reason why it is on my radar because Airbnb has been going down, but look at its last earnings period. It beat by like crazy, right? On the earnings
Yeah.
per share. And the revenue was way more than expectations. So like Dash is probably my number one target right now because it's discounted. And if you look at its all-time high, of all time, that 100% level is 257. So if you look at how much is discounted, Dash is at about a 70% discount right now. If you look at this level right here, Dash is 70% off of where it was at its all-time high. Airbnb is about 50 to 60% off. So Airbnb is less discounted. And I think there's more regulatory pressure on Airbnb than there is DoorDash. So that's why Dash is a better candidate for me, but I also like Airbnb as well. Looking at their options or their leaps, no, I think this is the reason why I didn't take that either. It's not liquid. So I would have to take these with shares too. It's not liquid at all. That's terrible. In the money. Nothing in the money is liquid. So,
Yeah.
yeah,
Because you said you look for something that had, what was your level again for?
at least 500 and
Yeah.
ideally 1,000. Like if we go to
I thought it was 1,000.
yeah, but ideally 1,000, but at least 500. We go to SPY. SPY always has some. Look at SPYs.
Yeah.
Easy. Qs usually have a lot of liquidity.
Everybody's in there.
Look at the Qs, right? You could multiple strike prices with at least $1,000 of open interest, or not $1,000, at least 1,000 open interests of people willing to buy and sell this option. Usually Tesla is mad liquid too. Look at that. A year out, Tesla is mad liquid. You just got to pick the right. Even Disney. Disney has some liquidity. I think I'm in. What was the 50? No, wait. Oh no, I'm in the Decembers. Even all the way out to December 2025, Disney's liquid. The one that I bought on Disney, 780. All right. So that's why I took the Disney trade and then the shop trade. Where's my shop trade? June 20th, 2025. Right here. 2,700 people liquid.
Okay, so can you explain this trade?
The shop
The
trade?
shop trade, yeah.
So essentially I did a leap. So I went about a year out. Almost a year to we're June 16th. This expires June 20th, 2025. And looking at the delta, it's 94 cents. So it's almost going to move 1-to-1 with the stock price at this point because it's deep in the money. And I bought it. I didn't buy this strike price or this strike price or this strike price because this one had the most open interest, which means it's going to be easier for me to get out of this trade because there are 2,700 people willing to trade this option.
Yeah.
Right. So that's also going to bring the spread, even though it's $400 apart, the spread's going to be less wide than an option that only has 100 people usually like willing to buy it. Typically anyway. So that's why I bought this option instead of this one, is because it had more open interest.
Gotcha.
Right. So that's in terms of choosing my strike price. My strike price was 25 instead of 35. And you'll see these are cheaper. I bought the more expensive options because I know this is more liquid. There's more liquidity there. I would have rather, instead of buying these, bought these because there's a ton of liquidity. But when I buy leaps, I like to be deep in the money because theta is going to affect it less, you know? Right. Deep in the money, it's further out, so theta's not going to affect it that much anyway. But because it's deeper in the money, it's going to affect it even less. Time at this point isn't affecting my option at all. That's a year out. So I purchased that one. Just looking at the chart, I'm not sure exactly which day. I feel like I got it either on this day or maybe this day, because I know it wiggled on me this day. I know I didn't grab it that day. It could have been this day or this day that I grabbed it. It hit my level, which I think was around 57, 56 bucks. I just liked how it was basing up. It was below the 200 moving average, but I liked the way that it was basing up here. It had that huge drop, and that's usually what I'm looking for because I don't want to buy anything at an all-time high. It had a huge drop, and then it dropped again, and then I just saw a bunch of consolidation kind of near a fib level, but it was just a bunch of consolidation there. And and not only that, I just bought a subscription to Shopify myself for my website. So I did a deep dive on a bunch of e-commerce companies, and Shopify looked good. And then once again, looking at the fundamentals, look at the earnings, this last earnings period. It beat on the expectations and the revenue. So I'm always looking for like, damn, and the profit margin is down because it's a growing company, right? It's one of the pre-revenues in terms of like it's making money, but this is something that I thought this is a company that's going to be bigger. I think it's going to win the e-commerce battle between Shopify, Wix, Square, and PayPal. I think it's going to win the battle because it's just the best software out right now. And that's the reason why my website is running off of it now, my bookstore. And I'm just looking at earnings. Is it consistently beating earnings expectations? Yes. So then my next question is, why is it dropping? If it beat earnings expectations, why did it drop? And then that's when the light comes on, like, this might be a good time to pick it up. And it's 75 to 80% off. Look at that fib level from the all-time high. So it's discounted. When the rest of the stock market was bouncing in October, it bounced with it. It's kind of in that tech community. So if tech goes up, it kind of goes up. So that's why I bought it there. And then it looked like it pulled back. Here was the high. It pulled back to a low right there. So I was like, you know what? This is a good time to kind of take a flyer on Shopify.
So why buy the option as opposed to the shares?
It's less expensive.
Yep.
And I was able to buy, what, 3? And they only cost me $3,460 rather. And so this costs per contract $3,460 to buy 100 shares. Remember, each contract is for 100 shares potentially.
Yep.
So to buy 100 shares of Shopify, how much is it? 6,766.
Yeah.
At the time, it would have been 5,000. So I saved $2,000 by buying options, but now I can buy more of them so I could scale out. And it was liquid. So if it weren't liquid, I would have took the shares. But I found liquidity.
Is your goal to sell the option and never buy the shares? Because I mean, let's say
yes.
That's the question. Yeah. Okay.
Yeah. And more so because the last 3 months before my option expires, the time decay is going to start affecting it more. So the value is going to go down. So yeah, my goal is to just make money off the options instead of buying the shares. But I told you on Dash, I can't find a liquid option, so I'm going to buy the shares.
Gotcha.
Airbnb, the same thing. If I get into Airbnb, there is no liquid option, so I'm going to buy the shares.
Good games, guys. I got to step out early today. We appreciate the info.
Yep.
Oh, no worries.
And then if you look at Airbnb too, when I drew the lows of the week, it was near kind of the bottom of that range right here. So that was another reason why I'm like, okay, Airbnb is at a good pocket to potentially like pick up, you know?
Yeah.
If you're drawing all of the lows on the weekly chart, at least the lowest lows on the weekly chart in this new range.
Yeah.
Right. It's close. So, but yeah, that's the issue is if you can't find liquidity on the options, I like the options because there's more leverage. So I can, like buying a house. Would you spend cash buying the house, or can you borrow some money?
Get some debt. Yeah.
So it's kind of the same thing with options. I can leverage my cash more. So I would rather take the options. But if I'm looking at the chain and there's no liquidity, that's a dangerous trade because I can get in this trade and then it goes my way, but I can't get out. I can't sell it. So
unless you want to
lower your price,
or I was gonna say pick up this actually execute on the option, which is going to cost you more money, but you got to have more profit to even break even.
Exactly. So I would rather buy the shares for Airbnb and Dash versus the options because I'm not seeing any liquidity at the strikes that I want.
Gotcha.
Yeah. So it's kind of like a this or that. I really like where it's headed, but I can't trade options. It breaks my rules to trade options on Airbnb and Dash right now.
Yeah.
At least a leap. It's probably more liquid if you have a closer expiration date. Like these, even these aren't that liquid that are like near. The closer expiration dates are more liquid, but if the leaps are illiquid as hell, so you'd be taking a huge risk of not being able to get out of a trade.
Yeah.
Yeah.
Okay.
All right. That's it.